Hi, David Moore, IRA Advantage, IRAadvantage.com, and I've got Tina Colson from my office here today asking me some questions.
Yes.
So what are you going to grill me with today, Tina?
Always grilling David behind the scenes, even in front of you today. So a lot of people call up, and also, we think about the fear of doing a self-directed IRA because we're in charge when we sign up for that. Now what? We don't have that advisor that's directing us on Wall Street. We have many choices in front of us that we can invest in: notes, loans, precious metals, cryptocurrency, and then the real estate. So really, it comes down to the comfort of the client. What is it that they want to invest in? But really, what are the, true risk factors and the percentages? So of that risk factor, if you think about it that way, when we talk about notes, there's all different price factors when it comes to a note if somebody wants to invest in that. So let's start with the notes and go from there.
Sure. So number one, I've just got to look at it and say, we've probably, any of us that have retirement money or money in Wall Street, there's probably been moments we've been very, very happy with our financial advisors and moments we haven't been, right? So what my experience in the self-directed world is, it's easy to get mad at somebody else, but then when it all comes back on you, it sort of gets to be more of a problem. So if I were to say, hey, over the last dozen years, we've had people that we've put checkbook IRAs together for that have never used them, that would be a true statement. Yeah. And when I talk to them, it's like, well, I put it together, but I just I wasn't comfortable making the investment. Well, that's a personal deal. That's a personal preference. It's not that I don't understand that. I do. I mean, it's easy to get mad at somebody else. Now it's all on you. So you're the expert. And I always like to say, when we're pushing self-directed retirement accounts, invest in what you know. If you're a mortgage broker, you want to do that. You asked me about notes. I mean, and this is one of those areas that I've got to tell you, do as I say, not as I do. So often it's,
what you do.
Exactly. So, when you're looking at note, I would never do anything but a first, and never for anything more than you'd be happy owning the asset for. With that said, I had something that wasn't a first 2 years ago now, and I ended up with a nice tax write-off. So, and I knew better, but it was people I knew, and I thought, hey, it's all good, and don't do that, all right? Keep the friendships alive, and just, keep it up and upright. But so, once again, if we're talking notes, never anything but a first, never for anything more than you'd be happy owning it for. Something that's really interesting to me about retirement accounts, and you've been with us for a year now, and you think about, think about the people come in. It's not a fair question because the last year's been what? COVID. So we don't have many people coming in. So, but historically, 1031 people, I hardly ever come in the office. And I don't really understand why. I mean, they close a deal, money gets sent into us, and we send it out, but we never see them. I might handle exchanges for somebody for a decade, and I've never seen them. And then we do a retirement account, and they come in. And I'll ask them, I said, well, why is that? And they say, well, this is my retirement account. And I said, well, I don't really see the difference. I mean, it's all your money. It's all something you've worked hard for, and we're going to work hard to keep it yours, right? So, I like notes. I like notes because, everybody thinks they own things. You don't own it until it's paid off. Right. And when we're having situations like we are now, I mean, the market's going absolutely crazy in real estate, and the stock market's all-time record highs too, and you've got to look at, what are the opportunities today. I was taught never to bank on appreciation, so of course I'm not going to, necessarily like what, maybe stocks if I'm banking on appreciating at the top of the market, where the real estate, if I can buy something with some leverage, somebody else is paying for it for me, I'm making a return whether it goes up or not. I could lose money on the value of it and still make money. So I really like that, unlike something personally owned where I'd have the interest deductions, depreciation. I don't have that either. But really, you're talking about comfort. So people come to us because they want to diversify. That's what it is. I'm going to tell you, diversification is what the secret is. You don't want to shove everything back and forth. But the other thing, the other opportunities are, one, obviously invest in what you know. So taking risk, what causes risk? And typically you got that risk and reward. The more risky, the more potential return, so on and so forth. But that's not necessarily true. As I said, if you're a mortgage broker, you probably have better knowledge than I do on notes, right? Well, could you take your retirement account to make additional loans? And the answer is yes. So that would be a less risky thing. That would be something you're comfortable with. Buying real estate with your retirement account, if you buy it outright, it's a pretty easy deal. If you buy it with leverage, it's going to be more cumbersome. You're going to have tax exposure on the leverage. You're going to need a non-recourse loan. It's going to be a lower loan to value. There's just other things, and there's going to be some, like I said, the tax exposure on the leverage. So it's a different thing. It's a little more aggressive. Now, those lenders in the non-recourse space, to exhibit that, they typically are going to want to see somebody that's had background experience in real estate.
Absolutely.
And they're going to want to see reserves, let's say 15% reserves or more. So when we're using a retirement account to go buy, let's say, a piece of property, number one, when was the last time anybody out there bought a piece of property and had it perfect when they bought it? They probably had things that had to be done. Tenants have a tendency not to treat things quite as well as you as the owner might. So you're probably going to have a potential for problems there. So I'm going to tell you, when you buy that thing, you better have enough for the purchase and enough to cover the carrying costs of that thing for a set period of time until you've built up some money. Get rid of that risk. Another reason people like self-directed retirement accounts is when you put something into Wall Street, it's wherever it is.
Correct.
If you want to put money into your community with a retirement account, you can.
Yes.
So if you want to make a difference locally, or you want to be able to drive by that thing, know where it is, or you just want the bank, your bank, to have that retirement account's money, if it's a solo 401k or a checkbook IRA, you put that account in the bank of your choice. So if you want it in a bank, you're not comfortable with ABC Bank, or you don't know who XYZ investment firm is and you're worried about what's going on there, this is one of those reasons people come to us. They want to know where their money is, and they want it with people they know and trust, and that's why they do it. So, a lot of cases you're taking something where they're uncomfortable and putting it into a place where they're comfortable. But as I said, we've got a number of people. It's sort of strange timing to me because, you look at the stock market, you look at where we are with all this stuff, and we've got a couple clients that have had checkbook IRAs for a couple of years, haven't used them. And it's because it comes back on them, all those decisions and what's happening with those investments. But I wouldn't say today's the day to turn those things back into a Wall Street IRA.
Sure.
Maybe wait another year and see what happens with everything, what happens with Biden's tax measures and everything else. That would change it. But, the fear is real. Because the fear it's on your shoulders. And as I said, you pick the wrong stock, or your financial advisor picks the wrong stock, it's sort of over there. And in this space, it's all on you. So, and your tax people, they need to be comfortable with what's going on too. They need to understand this stuff. And that's why I spent, the whole wasted COVID year, but the previous year I spent 2 different times I spoke with the Oregon State CPA Association going over these issues so that tax and legal communities on the same page with our people and taking them, getting where they need to be.
Which is so important. And so with the notes and the loans, whichever you choose to do, or both, you can start off with smaller increments, which is going to be lesser of a risk to you. But like David is saying, don't buy more than you wish to own if something were to go sideways. So that's the other piece of that. Precious metals. So we've got a couple different options with the precious metals piece, where in one account you can retain those precious metals in your possession, and other accounts may require you to hold it with a securitized.
So if you've got a basic self-directed IRA, so a basic self-directed IRA, for those of you out there that don't know what I mean by that, a basic self-directed IRA is an account at a custodian, and to make the investment, you have to submit the investment to the custodian along with a variety of forms, and then they will make the investment. They'll be the owner of that asset, whether it's whatever it might be, if it's the metals that you're talking about or the real estate, whatever it is. So if it's a basic account, they're going to require a depository, period. You're not going to be able to have physical custody of that stuff. A checkbook IRA is going to allow you to do that. So where do you want it? And I understand that stuff's not light, right? So physical custody, you got a lot of weight sitting there if you got much money into it. And we had a guy, it was probably a decade ago, he was concerned. Actually, it might have been a little longer ago than that. I think we're probably in the recovery from the last crash, and he was concerned about the metal being here, and one of the owners of one of the actually title escrow companies here regionally. He's an economist too, and he speaks all the time. And I always come back to him. Pat Stone's his name. He says, hey, you can say what you want about the United States, but we're the cleanest dirty shirt, right? So I don't know where you're going to put stuff that's safer than here, at least right now. Talk to me a year from now, I might have a different perspective on that. But anyway, if you look at what you're wanting to do, we had this guy that wanted to take the money offshore, and I'm going, okay, or not the money, the gold, and I'm going, do you know what that way? And by the way, the government wants to know this stuff. There's reporting requirements too if you're taking much of it offshore. So just understand the laws and how they apply. But to Tina's point, a checkbook IRA would allow you to have physical custody of it. A basic account is going to require a depository to have that metal.
Absolutely. And a fireproof safe if you are holding the metals yourself. I think that's a good idea too.
Melt that down on your own.
Absolutely. So another hot topic in today's world is the cryptocurrency and what's going on there, and the risk factors that may be involved. We see, Elon Musk comes out and he purchases up a large chunk of the crypto. And so we see the fluctuation in that market as well. But this is just another topic of discussion.
So that topic's really interesting to me, because if we go back, we're sitting at the end of March in 2021 right now. And if I go back to, it was probably the fall of 18, for example, I think it was, we ran crypto ads on the radio and huge response. And then I think it was 2019, we ran same ads and zero response. So you sort of look at what's happening in that market at different times. To your point, Musk has opened up a lot of that stuff. But if you want to invest, the bottom line is if you want to invest in crypto, our accounts are going to allow you to do that. You just gotta find that institution with the wallet that's going to open it up. And actually, I had a client this morning, we're talking about it. If we're talking about IRA funds in that world, you're really going to open up the account in the LLC's name and federal tax ID number. So just be aware of that. And that particular client was trying to open it up. They wanted to open it up he was calling on behalf of his mother, so they were wanting to put it in her name and SOCH, and that's not okay. So you got to understand, anytime you're looking at IRA, 401k funds, the best thing you can do to keep things straight and to be comfortable that you're doing the right thing is to make sure that you look at that account as not yours. So I always joke, I said, no, it's not you, it's Susie down the street. And as long as you remember that it's not yours, I think your opportunity to commit a prohibited transaction is much lower than if you think it's you. And we have clients, you've taken the calls that say, gee, I need more return off my retirement account. I want to go buy an apartment building. I said, well, what do you mean by that? You're not going to get the cash flow off it. It's not yours. It's a retirement account. So the only way you're getting that cash flow is by taking distributions. Mm-hmm. So understand whatever's going on. If there's a tax exposure, when I talked about tax on leverage earlier, it's not your tax exposure, it's the retirement account's tax exposure. So understand that whatever happening with that account, it's not you, it's it. And we like when you're setting up an account with us, for example, we don't want you to name that. People inevitably want to name it, if you're Susie, you want to call it Susie's LLC. We don't want your name on it. Okay, we want you to name it something that you're going to remember every time you look at that. It's not you, it's a retirement account. And the second reason we do that is we don't want IRA or 401k or whatever in the LLC's name either, because when you go to the bank, they're going to want to shove you off to the trust department, which you really don't have anything to do with. So it's really important. If you're going to put one of these accounts together, really think about what you're going to do with it. Mm-hmm. And make sure that you're comfortable doing it, because it is not right for everybody. If you're not somebody that's going to be diligent with your record keeping, it's not right for you. If you're not going to follow the rules on this stuff, it's not right for you. As I said earlier, if you got a Wall Street account, you can make a bad investment. You're not going to blow up the account. In our world, you can commit a prohibited transaction, which with an IRA is going to blow up the entire account. 401k, big difference, only the funds involved. So make sure that when you're looking at this stuff, make sure that you're comfortable doing what you want to do with it. And I think more so than ever before, it's really important also that you keep the diversification there. Keep the Wall Street stuff with your Wall Street people. Move what you don't want to use. Move the self-directed stuff and keep it segregated. That way what's going on over here is not going to impact what's going on over there.
Absolutely. And just know that when you're setting up a self-directed account, it does take a little bit of time. So make sure you've got a good 2 to 4 weeks before you're ready to make any purchases, especially if you're doing the Checkbook LLC account. And so we can definitely get you lined up with what you need. But like David's saying, be prepared. Know what you're going to invest in. Don't let your account just sit there, as we've seen, with some other clients, because it just costs you money and you're not really using that as it should be used. And so you have the option of what percentage of risk you want to take in what you invest in. And we just appreciate you joining us today for this educational series, and look forward to helping you out. If you have any questions, please reach us at 503-635-1031, or you can check out many of our YouTube videos on IRAadvantage.net. And when you look at that YouTube video, David, we're skiers. What do we say when we're ready?
When you see that like button, what do you say? Hit it!
Hit it. All the water skiers out there. Yes, that's it. So thank you again for joining us today. David Moore, Tina Colson, IRAadvantage.net.
Thank you.